Good morning, everybody, and this is your Dow Jones setups for today. So probably going to repeat myself here, but it is consolidation, it is non-farm payrolls, and we also have earnings season starting to kick off, and the first part of the earnings season actually impacts the Dow Jones. So I suspect we're going to, depending on the data, non-farm payrolls, but if it's what we're expecting, we're just going to continue ranging into the close of the week. If it's way better than what we're expecting, we'll probably rally fairly hard to test something like 33,313. And if it's very bad, you'll probably see us close below this 32,900 area for another big red bar on the weekly. So this has been the longest weekly red downtrend in a while. So you can see it's basically been one, let's argue with that one is going to be red although it's green, but 1, 2, 3, 4, 5. So it's been 5 weeks in a row, or even 3 or 4 that we've been moving the downward trend. That's the most that we've done this year. So anyway, it just coming up to weekly levels here, and it all depends on how this closes. If it closes below, then we should see a continuation down. Now, why I say 5 weeks in a row, because I don't know why we get all these arrows whenever we put objects in. Let me just delete all of them. Okay, so you can see here, and this was the COVID nonsense. You can see we had big weeks to the downside, big gaps to the downside, but short-lived. Every time there was another big week down, a big series of weekly red bars, and here was 3 as well. So it doesn't move down forever, what I'm getting at. So this is also a concern for me. Diversions at what could be support. I think it's going to be a fairly interesting non-farm payrolls, to say the least. Anyway, consolidation at the moment, and moving to the 3 hour. Don't forget to hit that like button and subscribe if you haven't subscribed. Let's try to get some more people watching and let them make a bit of money as well. So for me at the moment, you can see the range is clear. Have a look at the oscillators. They're separating, and this is indicating big downward trend, and it is down. We're not going to debate that, but sort of down, consolidation, and we should be expecting a break to the downside. I'm a little bit wary for that because of the weekly levels that we're at the moment. So there are going to be a whole host of buyers sitting in this area here. We're going to have to get through this quite convincingly before we get rid of those buyers. So for me, this is a data day, so it is non-farm payrolls. And you can see what happened yesterday. Big down, big up, big down, big up, big confusion. Stuck in a range. We typically don't just smash through the range until the data's out, pretty much. So it'll continue like this. Moving average will keep coming together. It's going to hover around the moving averages here until we get the data. If the data is as expected, you're just going to see us fizzle out into a little range. If it's way better than expected, you're going to see us shoot up, come back, find some structure, and try build a base and get a weekly close higher up to set us up for Monday. And if it's way worse than expected, you're obviously going to see us drop below this level here at 32,900. Now, me personally, I'm not going to be looking at this today, not at all. This is after I switch off for the video here. That will be it. I won't be looking at the charts again. I'll pick it up again on Monday. So, for those of you that are learning and still new to this game, what I would advise you to do is you get down to, I clicked the wrong button there, sorry, you get down to the 15 minute, watch the data, wait for the data to come out, watch your clock and see how price reacts to the data, but then more importantly, see how it deals with all these levels. So all these tails that you see here, if it moves up, it's going to validate all those as levels. So you want price to come back, you want price to sort of move up, break out, come back, and find support at one of these levels. And then you can ask yourself, what was so significant about the level that it actually bounced off. And I'm going to give you a hint here. Look at this. There's a pin bar. There's a pin bar. There's a pin bar. So that is just indicating that the bears see something here. So the bulls know that. And if they can get price through, they'll want to wait at these levels because these are significant levels to the bears. And they can get the bears to give up on their positions if they drive price up. So it's kind of the game that's going to be played. And then you see you've got pin bars to the downside here. You got there, you got there, you got there, you got there. So again, same thing would work to the downside. Big break below all those levels. Then I'd be waiting at those levels to see what price is going to do. If you start rejecting that level, it's short from there. If you start rejecting these levels, it's long from there. So just a fairly decent range breakout validation and trade. So that's kind of my view for today. I don't really have anything else. Non-farm payrolls, it's always volatile, but with the Dow Jones, you've got the added complexity of earnings seasons kicking off. I think it's Pepsi that kicks off today, but then majority of them will start coming in late next week. And that could impact us again in some form or other. So yeah, I'm sit on hands pretty much. Long weekend, not going to jump in on this, and we'll pick this up on Monday. Hope it helps, and we'll catch up with you on Monday morning. Enjoy your weekend. Cheers for now.